Paul, break down the decision for us.
Well, it's a decision that's only minutes old, Marcia, and as you've correctly told viewers, the Bank of Canada has decided to increase its benchmark interest rate. The increase is 1/4 of a percentage point, or often expressed as 25 basis points. The new benchmark rate at the Bank of Canada goes to 4.75%. This is now 9 rate hikes that the bank has put into place since February of 2022. And the reason is, the bank says, and I'll read directly from the statement, underlying inflation remains stubbornly high. And in the announcement, Marcia, the bank points to many of the same factors that you and I talked about an hour ago. Things like inflation remaining stubbornly high, employment growth remaining very robust, wages growing as well. It says that in the most recent release on gross domestic product here in Canada, consumption growth was surprisingly strong. It says that prices for a broad range of goods and services came in higher than expected in April during the most recent inflation release. These are things that have already been reported, so we know them. But the bank is summing up the accumulation of economic evidence that it believes is keeping inflation higher than desired. Inflation in April was 4.4%. The bank's target is 2%, and so it considers it necessary to increase rates again after a fairly long period of stability in the benchmark interest rate. It's going up again to 4.75%.
So what does this mean for people's mortgages, their credit card payments, Paul?
You can expect in the next 24 hours, Marcia, each of the major banks in Canada to raise their benchmark lending rates, their so-called prime rates, by 1/4 of a percentage point. That will flow through almost immediately to variable rate mortgages. Those mortgages, the rates being paid on those mortgages, and certainly if you're renewing, those rates will go up. The Canadian dollar is rallying on this news, and so if you are planning a trip to another country, the US or another country, a stronger Canadian dollar can be a bit of an advantage for you in that country. A strong Canadian dollar can be a negative, however, for Canadian exporters because it makes their goods more expensive on international markets. I think the big takeaway is the mortgage market. And what we'll see on variable rate mortgages, we are likely to see mortgage rates tick upward in the next week or so. And the bank acknowledges that one factor pushing inflation higher is the escalation in housing costs that we've seen. The last time we got inflation numbers, shelter costs were up 4.9%. And one reason that home prices have risen so substantially in 2023 is that the Bank of Canada stopped raising interest rates back in February. So it's very much a double-edged sword. But the early takeaway is you can expect the banks to raise their prime rates and variable rate mortgages will follow.
Paul Bagnell, thanks for all that.